What's up, everyone? Welcome to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everyone? How you doing?
Man, this week has been interesting. Interesting. I think
Just
we talk a little bit about this. The small cap finally joined the chat. They finally decided to join the chat. Bro, I feel like we talked about IWM. I got to go back and find that clip, man. I was like, look, they're talking about this interest rate cut and all that stuff. This might be a good time to jump into IWM. And literally, like, I think it was like a week ago or 2 weeks ago. And then I think moved like $10 since then, man. That's crazy.
I want to say that the amount of quality, actionable investment information we've provided
Year
over the last, almost year and a half.
and a half. You should be
I
sitting pretty, man.
I hope y'all been listening.
Man,
I
bro,
mean, we
between Oklo, between Intel and Boeing, I mean, we both miss Boeing, but
yeah, Miss Bowen.
we both miss Boeing. But between all of those, man, and then all the little calls, all the small swings, short swings, whatever that we talked about, it's like
Mhm.
crazy, man.
And then even um, walking you through what to do while
Mhm.
the market was selling off. We were saying,
Yep.
hey, just pick up pieces every single dollar
Nvidia,
cost
Nvidia,
average.
Nvidia
Yeah,
was the
I
biggest
said
one.
dollar cost average your way into the market while it's doing this madness. And
Yep.
if
Yep.
you did
Yep.
that, I mean, you
Man.
have you. I mean, I'm looking at my long-term mutual fund portfolio
Mm.
that only has mutual funds. There's no trading in it. It just money goes in
Mutual
every
funds.
single month. The 3 month performance on that is 32% now,
Damn, you beating the S&P and everything else. You're like
smacking it,
you beating even the hedge fund investors.
smacking it.
That's crazy, man. That is
So
crazy.
if you haven't told your peoples to subscribe and just listen,
I don't know,
to the
man.
information we're given, I don't know what else to tell you.
And it's free. We don't charge
We
y'all,
don't
man.
charge
That's
you.
crazy. We have a whole group, but it's like we out here giving you guys all the games, man. It's like it's I don't know what else to say,
I don't know what
man.
else to say.
I don't know. But overall, man, the major indexes closed a little high today. You know what I mean? Dow Jones closed at 44,922, just a little bit below the record high. So it looks like we're making our way back up there. S&P was up 0.3%. It actually almost reaching a new all-time high, 6,466 and 58. That's crazy, man. S&P was like at 5,000 like what, a month ago? That's crazy. That's nuts, man. The Nasdaq was up 0.1%, making another new high. The biggest winner of all, the Russell 2000 IWM, man. If you guys go see that, that thing ran like crazy over the past couple of days. You know what I mean? So I hope you guys caught it because we literally talked about it, and yeah, it was a good move. It was a good move, I have to say the least. But year to date, man, Nasdaq and S&P 500. They're both up about 1.2%, 1.7% for the Dow, and Russell is almost up 4.9%. So it's like we are moving, man. Like we are moving off the negative territory for the whole year, which is crazy.
I think the S&P and the Nasdaq are up more than that for the year.
Oh,
I think
oh,
so.
I'm sorry, week to date, but
Yeah.
year to date, the Nasdaq is up 12%.
There we go.
S&P is like up 9.9%.
There we go.
So
That's what I was. Yeah, yeah.
we crushed that whole drop that we had. You know what I mean? We came off of that correction and everything is just flying right now. Now, of course, there's a lot of things that contribute to this, right? So, I mean, we got to talk about that too a little bit, but there's a lot of stuff that contribute to this. The biggest one I would say is we're talking about rate cuts now, right? I
Hmm.
don't know if it's going to happen. I think Besant, whatever his name is, came out today that he's thinking about 50 point basis for September, and he's predicting like three. I don't know because he doesn't control what Jerome Powell does and all that stuff. So it's like I don't know if Jerome really gonna, you know, go along with that. But again, the numbers that came out that got revised that kind of shook the whole market. And I think now they're saying we need the real numbers, the real numbers. The only thing that I'm concerned with that is if the real numbers is actually the fake number, then we're in deep problem. You know what I mean? Do you understand what I'm saying? Because if somebody just comes out and is like, "Oh, we're doing good," but when you're actually doing really bad, I
And
mean,
I don't know if there's any way to fact check those numbers or if they get audited or what. But I will say this though. I think So we got Jackson Hole next week, which is basically a Fed summit where they talk about what's going on in the economy. If the next job numbers are weaker, or if the unemployment claims start to, ruffle people's feathers, then I think that will justify a rate cut. Because this is always tell people, you don't cut rates when things are typically going well.
Mm.
You cut rates when things show weakness or going bad, because you want to help stimulate the economy,
Yep. Yep.
right? The fact that stocks have been able to reach all-time highs without necessarily any like quantitative easing from the Fed with rates is a good thing.
Yeah.
So to me, I'm still in the camp with the Fed where it's like there's no rush. There's no rush to cut rates right now. Now,
Mm.
you start getting weakening job data, right? Or you start getting weakening earnings. The earnings have been pretty good for the most part. There are some
Yep.
struggling companies on the struggle bus, but for the most part, things are okay. So I think September we'll get 25 basis points.
Yeah. Yeah.
I
Yeah.
think I think it's justified, but I think we'll get more confirmation from the next job reports that comes out in August.
Yep. Yep.
So
And can you link to the people what is the connection between that and the small cap? Like, because we see IWM moving. Like, why is
yes.
that concerning for them?
So small cap companies typically are not profitable for the most part. Or if they are profitable, they reinvest a lot of their profits back into the company to grow.
Facts.
So
Yep.
one of the things that they need to do is they need financing. They need to borrow money. So when money is cheaper, that's less stress on your balance sheet.
Yep.
That makes things easier for you to grow. So that's why when we do get rate cuts, or when we hopefully start to see, rate cuts happening, small caps will then start to participate in the rally. So that is what everybody is hoping for. So I'm
Yep.
I'm a I'm a big believer in IWM if we do get small caps. I'll also say this too. Um, when you have recessions or downturns in the market, small caps tend to also do very well when things start to turn around. So keep that in mind. I always like to keep a little bit of small caps in my portfolio, at least like 5%, regard in my diversified portfolio, right? Usually at
Yep.
5%. But when things get kind of ugly, right? Or when I'm kind of playing a recovery, I start to get a little bit more aggressive, maybe go up to
Yep.
10 or 15%, because when they come back strong.
Yep. Yep. And I know you talked a little bit about earnings, man. So let's hit them streets when it comes to earnings. So some of the grocery store kind of reported today. So if you look at grocery stock, I would say Instacart was down 12%. Go look at that chart. DoorDash was
Mm.
down like 3.8%. Kroger was down 4.4%. Walmart's down 2.5%. And of course, Kava Group, man, that thing got smacked. It was down like 17% on weaker sales forecast. So let's talk about that, man. I mean, I, I know you mentioned like, are the consumers finally starting to feel the effect of like, the effect of all the, tariffs and all that stuff. So are we starting to feel that? Because Cabo, I mean, I don't know if you guys ever been to Cabo, but it's like when you go there, the line is long, and their stuff is not cheap, So it's like, are the sales going down? Are they forecasting like weaker sales because of this whole prices going up? So let's talk a little bit about that.
Yeah, I think what is happening, I still think that there's still, I wouldn't call it stress on the consumer, but consumers are making choices where they're saying, we're trying to not spend as much money in certain places,
Mm-hmm.
and I think one of the places where they're probably cutting back is eating out, especially when it comes to places that are premium priced.
Right.
So, Kava, Chipotle, Sweet Greens, right? All those places are premium options when it comes to dining out fast food.
Yep. Yep.
So all of those stocks are down for the year because of that, to me, of that phenomenon. Because, if I'm, you know, not making as much money, like I'll give an example. I've heard in the services area, places like Las Vegas and things like that, tips are down. Like people aren't making as much money on tips.
Heard
Um,
about that. Yes.
exactly. And when the consumer is feeling a pinch, or if I'm spending more money on other things, right, that are costing me more money, then eating out at a premium place like Caba or Chipotle or Sweet Green, that's going to take a back seat of my finances. So
Mhm.
all of them pretty much got smacked after earnings. Um, I think that the consumer, I wouldn't say that the consumer is strong. I would say that the consumer, to me, is making it mainly because as long as you're still employed, you're probably in good shape. If we start to see unemployment get out of hand, then that's where things can get ugly and we can get in trouble. But for now, I think consumers are making very distinct choices
Yeah.
when it comes to their finances, and things like Kava and Sweet Green, stuff like that, they take in the back seat right now. It's a luxury item at this point.
Yeah. And nobody's gonna spend no money on, the luxury items and all this stuff.
No,
So
not right now. So I
yep,
think that
yep.
that's why that they're suffering.
Which is crazy, man. I mean, if you think about it, like if tariffs, I mean, that's what I hate about this whole tariff conversation. Is like eventually people are gonna start feeling it. It might not be equally on all sides, you know what I mean? Like it might not be like you go to the grocery store and everything is expensive. You might go to a favorite restaurant and you can't afford to eat there anymore. You know what I
Hmm.
mean? So it's like all of those things affect consumers at some level. So it's like sometimes I'm like, how are they saying like, oh, companies are gonna eat this? Like they've been eating it maybe for the past month, and they're probably like, oh shoot, like this is actually a lot on us. We need to pass some of
Hmm.
those costs over.
Hmm.
So
And I'll
it's
also say
crazy.
when we got CPI this week, CPI
Mhm.
came in pretty much in line,
Yep.
but core CPI was a little bit hotter than what people expected. So the difference between regular CPI and core CPI, core strips out energy and food.
Yep.
So when you strip those two things out, core CPI actually went up. I think one of the things that's helping CPI is energy has been really weak.
Yep.
Energy has been really weak. And I think that
Yep.
that's helping the consumer. If energy starts to tick up more, because I think from what I'm hearing from a lot of the OPEC countries, they have been increasing supply of oil, which I think is good for the consumer because prices don't go as high. So yeah, I think people are feeling it, but again, I also think that businesses are getting really creative with how they are structuring tariffs that they're feeling in some of their good items and things like that. So
Hmm.
um, not enough to derail this bull rally, but it's just something to me that you just have to be aware of because core CPI has been trending higher for the
Right.
last, I want to say, 3 or 4 months.
Yep. 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 So we shall see, man. We shall see what September looks like when we get more, more numbers and see what the Fed's gonna do about this interest rate.
Yep.
And but right now, I think this bullish movement is dependent on people are forecasting the cut in September, right? So it's like that's another thing you got to be very very cautious of. Like people are forecasting, people are pricing in that cut right now. If anything comes up that they're not doing the cuts, we probably going to see the market drop down a little bit. So
Exactly. Exactly. Yeah. If we don't get a cut in September, I think we're going to see a drop.
yeah,
Yes. We'll
so
see a drop.
be very very careful. That I mean, I'm like I'm like 60 to 70% sure Jerome is gonna be like, nope, no cuts. But we shall see, man. We shall see. Maybe the Trump administration will arms twist him a little bit and have him gonna go ahead and do it.
Show up
So
at his
far he hasn't
house,
been complying.
deploy the National Guard to his house.
Yeah, we're like, come on, Jerome. Oh man. But let's move on to this 15% taxes, man. I don't know. Bro, when I heard that, I was like, really? Are we squeezing the companies now? Like so if you guys are not aware of what's happening, so the Trump administration just made up this crazy deal arrangement with like companies like AMD and Nvidia, basically saying that in order for them to resume selling their chips to the countries like China, one, they have to sell their older model. So, for example, NVIDIA have to sell their H20 and AMD have to sell their MI 308 to China, right? But the key condition is they must pay 15% of that revenue from that sale to the US government. I have never seen anything like this. You know what I mean? So not only are you getting tariffs, but you're also getting like a 15% revenue on top. I mean, I don't know if they're getting tariff, but it's like what is happening? You know what I mean? Why don't you just go ahead and charge China directly and be like, hey, you guys gotta pay us this amount of money? Why you gotta squeeze the companies to pay you percentage of that revenue? Man, this is like a mobster style shakedown. I don't know what it is.
Somebody
It's
put it.
all-
I just want to go back to the Kava discussion. Somebody said $20 bows ain't it.
Oh,
But yeah, President, I mean, what is it? I guess you got to call what an export tax or something like that. So Trump came out and said, all right, he actually asked for 20% originally. And
crazy.
then I guess they decided that 15% is where they should be at. But man, that's Scott Bessent said that the money from that is going to go to cutting down the deficit. But
How? Who's gonna keep track of that money? That's what I want to know.
that's what I'm saying. Who's going to keep track of the monny?
Who's keeping track of that? And if he's gonna go to the right place, you know what I mean? Is the Doge gonna keep track of that? Oh no. Who's gonna hold them accountable to like, oh, you guys got $1 trillion this year. It needs to go all into the deficit.
Let me
I
see
mean,
how much. Let me see how much those sales. I think I did the math on this real quick. Let me see. Give me one quick
while you're
second.
looking that up, Shane said you have outperformed Pelosi this year. That's funny.
If the United States government wants somebody to manage a sovereign wealth fund, give me a call.
Yeah, give Wale a call.
I'm not
Like,
hard to find. So let me see what the revenue from that is. I thought I wrote it down. Never mind.
yeah, but
Okay.
you got it.
Yeah. So NVIDIA H20 sales jump with China's AI investment. So roughly in Q3 of 2024, it was right around 5 billion, almost $6 billion a quarter. So let's just call it 5 billion a quarter. Let's just say 20 billion a year times 15%. Gee, that's like $3 billion in revenue a year.
Yeah,
Sheesh.
a lot of money.
Yeah, that's a lot of money.
But who's gonna keep track of that? That's what
Yeah,
I want to know. You know,
yeah.
that's what I want to know. Who's actually gonna keep track of all of that to make sure that they're actually going to the right place?
Hmm.
I don't know. You know,
But I
but
mean,
yeah,
it's an interesting proposal because I guess as a company, it's kind of like, okay, do I want to have no revenue from China, or what? I'm okay with 85% revenue from China. And I guess 85% of something is better than 0% of nothing. So
yep.
yeah,
I
so
mean, if he's bringing money in, then I guess yeah,
yeah,
it's all working.
because you don't want to shut down that entire revenue stream completely. So it's kind
Yep,
of like you make a deal with the devil,
yep,
and
yep.
say, hey, we'll give you 15% of the revenue. But I wonder if that's gonna if more companies are gonna have that same stipulation. If that becomes like, hey, if you want to sell to China, you got to give us X amount of revenue. I don't think it's gonna be like, I don't think they're gonna do it on like food or anything like that, but anything that's technology based, I wouldn't be surprised if that becomes a new thing. So
Yep. But yeah, let's move on to Circle and Core Weave. Their first earning, man, they both got smacked. I mean, I think Circle kind of popped up a
Circle
little bit,
popped a little bit and then sold off
and then
afterwards.
it got sold off, man. But let's talk about those two earnings. This is their first earnings ever. So, I mean, the numbers weren't bad. It's just like I think people are finally factoring in the well, it looks like Core Weave actually reported a loss of 0.60 cents per share, significantly worse than the anticipated 0.45 per share. So they definitely, and the expenses actually went up. God dang. The
Yeah,
operating cost surged by 276%. Woo.
yeah. The only issue that I've had with CoreWeave personally is that they're heavily financed. Got a lot of debt. That was my issue with investing in them originally. Even though I didn't miss the move from 33 to 187, I'm not gonna say
Crazy.
that like that was a mistake by me. I thought I was gonna get to 30 and never did.
Mm-mm.
But um, they're heavily financed. makes me just a little bit nervous, just a little
Yep.
bit nervous. And their debt service is not cheap. And as a public company now, where you got to start reporting that stuff, investors are gonna kind of scrutinize you when it comes to stuff like that. So they
Yep.
dropped 20% today.
Yep.
I should have shorted them. I should have shorted them. I should have shorted them.
That
But
IV was high though, so I
it
don't know,
was
man.
it was. I admit. And then Circle revenue beat. Everything looked good yesterday. I think it hit like what, a high of 189 and then sold
Hmm.
off to 153 today.
Yep.
So
Yep.
gave up a lot of those gains. So um obviously with a lot of these new tech companies, you also have to understand that they're going to be revenue heavy and profit light in the beginning
Yep.
stages.
Yep.
That's just
Yep.
how they're going to operate. But eventually, if they figure it out,
It'll
then
come back up. Yeah.
they'll start to come back. So that will be
Yep.
something that I'll be monitoring. And in Circle, I think another company just went public today. Bullish, they're a
Bullish. Oh, they're up
they're
like 80 some percent on like
yeah,
today.
yeah, they're a crypto exchange, and I wonder
Hmm.
if they are competition with Circle because I think they play in the same sandbox when it comes to stable coins and things
Yep.
like
Yep.
that.
Yep.
So
Yep. Yeah,
yeah,
they
but
were up like crazy today.
yeah, I'm not a buyer of either one just yet, but I will be keeping my eye on those companies. So if you're a, I always want to tell people if you're an early IPO investor, especially if you're getting in not at the IPO price, you just have to be careful that sometimes you might get some of these big volatile drops from time to time. So you got to
Yep.
be able to
Yep.
stomach those.
Especially the
Um,
first year IPOing, man. Like
yeah,
you're gonna get those. You're gonna get
yeah,
definitely get those
yeah.
movement and stuff.
You get movements that are not always. You got to be able to stomach a lot of volatility in the beginning.
Yep.
Yeah.
All right, man. It is almost 8:30. Let's go ahead and jump into our weekly Wednesday stock review. And I know we're doing Airbnb analysis today. So if you guys don't know about Airbnb, it was founded in 2008, I think, in San Francisco. Originally, it was launched as Air Bed and Breakfast, and then they changed the name to Airbnb in March 2009. So I'll hand it over to you, Wale, and let's dive into that.
All right. So we're gonna do a deep dive into Airbnb, looking at the fundamentals of the company. So let us start our analysis. All right. So Airbnb ticker symbol trades on the Nasdaq ABNB. They are in the online travel and hospitality industry. Roughly got $100 billion market cap. I want to say that might have been as of close of today. But let me actually pull up the chart on my other screen as well so I can go through some things. All right. So let's talk about their main business. So Airbnb operates an online marketplace for lodging, primarily for homestays, vacation rentals, and experiences, which was just added recently to their business model. They make their money by charging fees on services. So they charge hosts, it says 3% service fee for each booking. And they charge guests anywhere to 0% to 14% service fee dependent on the booking. A lot of their revenue also comes from, I won't say a lot, but they're starting now to add experiences and activities, which are done by local hosts to their revenue stream. So that is something that was newly added not too long ago from Airbnb. All right, so let's look at their customers. So usually, again, retail customers, there are B2C, so business to consumer. Also, I guess B2B as well, because if you're a host, you're a business in a way. So B2B as well. So that's how they make their money. They don't own any of the properties. So they are not a very capital intensive business when you compare them to other names like Hilton and Marriott and things like that. They don't own the properties. So that's a little bit different in their portfolio. So most of their revenue just comes from booking fees. So look at them as a broker. They are a broker where they connect businesses who are hosting locations to consumers who want to be in those locations. So that's basically what they are. They're a travel broker. Their competition, Booking Holdings. So you're talking about Booking.com and Priceline, Expedia, which also owns Vrbo, Trip.com, and then you have your traditional hotel businesses, Marriott, Hilton, things like that. And then they also, I've heard of these niche platforms, HipCamp and Sonder. So they've got a lot of competition in that space. But you also have to understand that they have two types of competitors. You have other brokers. Expedia and Booking.com are like brokers because they do the same things, but they connect hotels and flights and cruises, and they kind of package deals and things like that for customers. Marriott, they basically handle things like hotels, and I think sometimes you can also combine flights with some Marriott and Hilton ownership as well if you're like a timeshare owner and things like that. So a lot of competition in that space when it comes to travel. Let's look at their revenue. So consistent growing revenue over the last 5 years, 3.3 billion in 2020. That was COVID year. 5.9 billion in 2021, 8.4 billion in 22, 9.92 billion in 23, and then 11.25 billion in 24. So strong trend, nice recovery from the COVID years. But one of the things that has hurt the stock is you can see that the revenue growth has been slowing down. So they grew 77%, then that dropped to 40, then that dropped to 18, and that dropped to 13. So when you see slowing revenue growth, not saying that it's a red flag per se, but you want to start to understand why. And in some cases, when a company doesn't have a large moat, so that means that they're not like an exclusive dealer or there's not a lot of exclusivity in their business, it could mean that other competitors are taking market share from their business. Let's look at profit margin. So 2020, nasty profit. Again, that was the COVID year. So business really slowed down. That was disgusting. Um, Good recovery in 21, 22, 23, and 24. They've been really in that 23% profit margin range. But again, let's look at what has happened over the last couple of years. 22, 23, and 24, profit margins have been decreasing. So they've kind of been in that 20% space consistently over the last 3 years, but you can kind of see that those margins are starting to decrease. Let's look at free cash flow. So this is a really good thing about the business that I do like is that they've had consistent growing free cash flow. So 97 million in 2020, 2.1 billion in 21, 3.41 22, 3.78 23, and then 24 4.05 billion, and then they're on track I think for 2025 to reach about 4.15 billion in free cash flow. So pretty strong free cash flow trajectory, which means that they do have money on their balance sheets to reinvest into the company. So when you see strong cash flow on the free cash flow side, even though revenue is slowing down, that to me is a silver omen or silver lining that I can say that this is a good thing that would at least get my attention to probably invest in the business. Valuation. Now, so here's why the stock has been dropping, in my opinion, and I need to pull up a long-term chart, is they hit a high of 170 back in, actually, let me go back a little bit further. Give me one quick second. Oops, this is not what I want to see. Let me go back. All right, there we go. So valuation is the issue. So current PE ratio was 36 times earnings. Basically, you're paying $36 for $1 in future earnings for the company. Forward PE is 31 times. The average for the sector that they play in is about 25 times. So as an investor, this is the thing that I have to understand is, okay, if I want to invest in the hotel and hospitality space, the average PE is 25 times earnings, right? But if I want to get into Airbnb, I got to pay 31 times forward earnings or 36 times current earnings. So that's a premium. So if I'm paying a premium for my earnings, then I need to see hyper growth. I need to see strong growth in the company. And we haven't necessarily seen that when you look at their revenue. You kind of see that their revenue is starting to slow down. So if I'm paying a premium for something, but the revenue isn't growing at a clip that I feel is justified, the stock price is going to get hit. So that is one of the reasons why I see Airbnb, the stock having, I think they just had earnings recently and they dropped on earnings. I think that that's one of the reasons why investors, especially institutional investors who look at this type of stuff, are saying, price is a little bit too high. If it comes down, I'll probably get in. So if that current PE ratio starts to drop closer to the sector average, that might be a omen that, okay, this is a good business to jump back into. Or if we start seeing accelerating revenue growth, then that might be another thing to take a look at from the business model. But right now, just not seeing that. So that's probably why they're starting to sell off. And I want to say, yeah, they hit a high back in 2021 of 219 a share. I think that that's what it was. And ever since then, they have pretty much had some pretty tough years. I think 2024 was a flat year. 2025 been pretty flat. So if you look at where it opened, the stock opened at 131 and it's now trading at 124. So not a lot of movement in the stock over the last 2 years.
Yeah.
So that their business has been getting hurt a little bit. All right, let's look at their balance sheet. Now, this is a good thing about their balance sheet. So they're not a very capital intensive business. So they don't own the homes, they don't own the properties that are in their portfolio. So that's very good. So when you look at their assets, 19.2 billion versus liabilities, 19.8 billion, very positive thing as a business. Very little debt when you compare it to their assets. So again, when you're looking at a company that is looking to turn things around, this is one of the things that that I would be looking at is, do they have a strong balance sheet that can help them turn things around? And so far, you can say that Airbnb does have that potential. Operating margins last 5 years, so very similar to their profit margin. So operating margins, obviously COVID was bad, recovery in 2021, and then you can kind of see that they've been playing in that 20% range when it comes to their operating margin. So that's pretty consistent as a business for them. When you look at what analysts are saying, moderate buy, so not a strong buy. They look at 24 buys, 15 holds, and then 4 sells. So again, analysts aren't really dogging the stock. They're just saying, I probably wouldn't be a strong buyer at this price. Average target price is 185 versus the current price. It says 160 here, but that's not true. They're trading at 125 right now. So there is potential upside on the stock, but I would say that I would be a cautious buyer. I think today they did pop 2.42%. So yeah, this is a stock that its best days are behind them, but they've got to pretty much turn some things around if they want to look at getting back to those all-time highs. So premium multiple versus their peers. So again, you're paying a premium to get into the space if you want to invest in Airbnb. Asset light, which is good. They have a very good global brand, and profit margins are pretty consistent. But one of the things that I've been hearing a lot of, they got a lot of regulatory hurdles in major cities, lots of competition. So again, the hotel space, you got a lot of competition in that space from a lot of other businesses. So again, not a wide moat when it comes to their business model. And opportunities, international expansion, experiences. We'll see what the experiences start. If that's a new revenue stream that will help them start to generate business, because again, with experiences, they're just a broker. They're just basically connecting people who want to have experiences, people that want to buy those experiences. I mean, people who want to host experiences to people who want to buy experiences. So again, that broker model, very, very capital light. So that's good on the operating side. So we'll see what happens. But right now, personally, that's just probably not a space I'd want to be in right now. So now we start playing in that $100 range, $90 range, then that might get my attention. So that is my analysis of Airbnb.
No, that's pretty dope, man. I think they have opportunity, right? Because if you think about it, when you travel, like the experiences, I've seen it on their website, but I don't think they are taking full advantage of it, right? So let's say you book an Airbnb,
Mm-hmm.
most of the time you have to go outside of Airbnb to start booking like things like excursions or start booking like things like
Correct. Yeah.
chefs and all this stuff. So
Yeah.
it's
Yeah.
like
Yeah.
I think they really need to take advantage of that, which will create like a custom trip for somebody. So if I'm going to like, let's not even say outside the country, let's go. I'm going to Arizona and I want to be able to enjoy my time there, right? There should be a way for me to book the property, and then there should be a way where you can walk me down like certain things, right? It's like, okay, now you booked the property. Here are some of the things we recommend you doing. Let's start with food. Let's start with booking reservation for restaurants. Like, you know what I mean? Start making those things and and making money that way. So
Yeah.
even moving into like planning somebody's whole trip, starting from the flights to getting to the airports, maybe partner with Airbnb with Uber or one of those things. Get you to the airport. From the airport, get you down to your place. You already have a like a transportation to take you to the Airbnb, and from there it's like, you know what I mean. So it's like figuring a way, it's kind of like what you said, to be a broker of all things
Mm,
entertainment, all things travel, right? If
correct.
they
Yeah.
can figure that out, I think they're gonna
Yeah.
be the only. They already have the name. They just got to add all the other stuff in there.
And I think when it comes to their competition, Expedia, those package deals, like you can get a flight on Expedia, you can get a hotel on
Exactly.
Expedia, like you can
Exactly.
really package an experience
Yep.
to your liking.
Yep.
Same thing with I think some of the hotels like Marriott and Hilton partner with certain airlines where if you
Yep.
need to get a flight or you need to get an Uber to your hotel, like you can do a lot of those things
Yep.
on their platform. So we'll see
Mm-hmm.
if Airbnb jumps on, because let me look at Expedia real quick. So Expedia, they popped after earnings. So Expedia is green on the year.
Yep.
So Expedia is green on the year. And then let's
But
look at
Expedia is smart though, because it's like, because if you guys know, like when Expedia first started, it was only booking flights, right?
yep.
And then they added hotels, and then they added car rentals, and now they're adding
hmm
more stuff, and they even like added short-term rentals in there too. So it's like, they're adding more stuff and strategically doing it, right?
hmm
So I think Airbnb already has the name. They already have the marketing name that's going for them. I think if they just added more and make it exclusive and make it like something that's like not offered just by Expedia, right? Just make it like really nice. Like though the whole like me being able to go to my hotel and already have all my week planned out. Like, come on, man. Like they can
Yeah.
do an AI that can write your whole thing for you and book everything for you. Like this is the age of AI. This should be taking advantage of that.
Yeah. And if you want to be in the hotel space, go compare the chart of Airbnb and then go look at Hilton, HLT. Go look at
Yep.
Hilton.
Yep. Hilton been moving, man.
Yeah. Go look at Hilton over the last couple of years.
Sheesh. Yeah,
Hilton has had strong
good.
movement
Yep.
from a business standpoint. And then let me look at Marriott.
Maybe they're probably up there too.
Yeah, Marriott's another one that's had it. Now they're flat on the year, but if you look at their trajectory compared to Airbnb, completely different,
Completely different.
completely different.
Because they're so focused, they're so niche. So it's like,
hmm
um, yeah, they're so niche with their stuff. So it's like, and also Hilton has a lot of other stuff, right? They have resorts. Marriott, same thing. They have resort, they have vacation spots.
hmm
So they're not just operating in like hotels, but
Yeah.
yeah.
Yeah, the two stocks I'm looking at that are struggling in that space, TripAdvisor has been on a decline like crazy.
Yeah. I
They
mean,
had a
Expedia probably smacking them in that area too.
yeah, they had a high of 107 down to their $10 stock now. And then let's look at Booking.
Focus probably up there.
Look at booking.com. Yeah, booking.com, another strong stock in that hotel
Yeah.
space. So yeah, they're a $5,000 stock,
Yep.
$5,400 stock.
Yep. And the reason why booking is it's like doing so good is like if you ever want to book international flights, um, a lot of those, especially if you go into remote areas, like let's say you go somewhere like I went to South Sudan, right?
Mhm.
It was very hard to book on Ethiopian airline directly because my card wasn't working on their website, right? So whenever I
Mm,
used my Visa or MasterCard, even though it said they accepted, it wasn't working. So in order for me to book a flight through them, I had to go through booking.com and then they booked the flight for me, right? So it's like now you see they kind of solve a specific problem in that area. So again, they make it easy for you to book some of those international flights that your card might not work in.
Hmm.
They're there to help you out. So that's why they're like a big stock right now.
Yeah.
Yeah.
So Airbnb, maybe there's some value there. But again, I as an investor, I'm not paying a premium for slowing growth.
Nope.
No, that's the biggest thing. If you're it's kind of like this is the example I'll give. Like if you're an NBA player that's been putting up that's used to be you're used to putting up 30 points a game, right? Now you're going from 30 points to like 26 points to like 25 points to like 24 points. Now that's still good, but you can't come to me in a contract negotiation and say you're a max player now.
Yeah. Yeah.
No.
You
Your
can't do that.
your stats are declining. You're still a good player. You're still a solid player, but I'm not paying higher than market price for declining statistics.
Yep.
That's how
Yep.
I would put how that's the realm that Airbnb is in right
Yeah.
now.
But that's your breakdown of Airbnb, man. I hope you guys enjoyed that. We're gonna keep doing this one. We'll do another one next week also. And remember, Friday we do financial Friday. So any questions that you have regarding finance, it can be as simple as how do I budget. It can be as complex as I think we talked last week about 401k and all that stuff. So it's like
Yeah. Mhm.
whatever questions you guys have, please drop it off for us. We'll do a survey on our call too, so you guys can drop some questions and
Yeah.
stuff on there.
So
So
Friday, the topic that we're going to talk about Friday is municipal bonds.
you okay?
So
Nice.
somebody wanted to learn about municipal bonds, and I think that's the only response that I got. So I'll be. I didn't have a bunch of topics to pick from. So we'll do a deep dive into municipal bonds, what they are,
Yep.
when they're probably good to have in your portfolio, and yeah, we'll talk about those things.
Yeah. But coming up this week, I think tomorrow we have PPI. I think. Yep.
Yeah,
We have
PPR
if you
tomorrow.
have PPI tomorrow, and then we of course we have the weekly initial jobless claims.
Yep.
That might be important, so keep an eye on that one. That might move the market a little bit. So we'll see. The Federal Reserve, Richmond Federal President Barkin speaks again tomorrow. And then in terms of earnings, we have Applied Materials, John Deere, and JD.com reporting tomorrow also. So keep an eye on those. Friday, we have some retail sales. Oh, we don't have a lot of stuff going on Friday. So we might be well, we have that Michigan consumer sentiments that kind
Consumer
of,
sentiment.
yeah, made the market crazy a few months ago, but we'll see. We'll see where we go from this. But yeah, other
Yeah.
than that, we don't have a lot of stuff going on this week at all.
Yeah. Rick Reeder from BlackRock, fixed income. I don't think he's a manager, but I think it's like a chief investment officer. He's talking about that this is probably one of the best times to be an investor right now, because the backdrop of what's going on in the markets has been pretty good.
Yeah.
One question I do have though is that I wonder if Warren Buffett deployed any of that cash he had while the market crashed.
Oh,
I
yeah.
wonder if he deployed any of that cash because
Mhm.
if he's still sitting on cash, boy, what a missed opportunity he made.
Yeah. Yeah.
So,
Unless if you know something's going on. I don't know.
but to me, even how should I put it? Even if you think something is going on, you could have rode this wave since April,
Yeah. Yeah.
even if it's a temporary wave, right?
Yeah.
Like,
I'm pretty sure he deployed some, but maybe not a lot, but I'm pretty sure he deployed some.
well, I
Like
think
you have to.
when they talk about their next when they do their next report, that's one of the things I want to pay attention to
Yeah.
is
Yeah.
did he deploy any of that cash? Because if he did not deploy any cash,
Mm.
maybe he should hire me instead.
Oh man, you never know, man. I'm pretty sure. I mean, he must have
I hope
deployed
so.
some.
I
He
hope
must
so
have
because
deployed
you know
some.
Warren Buffett liked to play it safe, right? He
Mm-hmm.
plays it real
Mm-hmm.
safe. Like
Mm-hmm.
he's not a real like aggressive investor, right? He likes to play. He likes what he likes.
Right.
And if you look at
Right.
his portfolio, like you see, he doesn't invest in a lot of like growth companies. Like you're probably not going to find a Planeteer or a
Nope.
CrowdStrike or an AppLovin in his portfolio. I don't even think he owns Nvidia.
I don't think so.
I don't think so.
Mm-mm.
So he has a specific model that he follows, and he sticks to that because a
And
lot of his
it's been
stuff
working for him.
it's
So
worked for him. It's worked for him. But I also still feel like there's been a lot of missed opportunities because when it comes, I don't he doesn't invest in a lot of like technology. I want to say Apple might have been his biggest
His biggest
technology
one.
holding,
Yep. Yep.
but I don't think he owns like Microsoft. I don't think he owns like Google. I could be wrong. I have to check that
Yeah.
portfolio. But
Yeah. But hey, he's stepped down, so we'll see what the new person running.
if the new guy, yeah,
Yeah, there might be a little bit more risk taker, so we'll
yeah,
see.
yeah. So, but yeah,
But
he
yeah,
likes like oil and like banks and stuff like that. That's kind of like
yeah.
his
Oh,
consistent cash flow companies. That's kind of like his mantra.
he's an old school. He's an old school person, like that
Old
slow,
school.
slow rolling in money. I mean, he did a good job. I mean,
Yeah,
the man's
exactly.
sitting on pretty. He's
And
sitting on pretty.
that's why I always tell people it's like as an investor, right? Like some people think that you got to pick the right stocks. You got to like if you are just part of the market in general, like you're gonna be okay in the long run. Shane said his son took over. It's not his son. No, I don't think he has a son, if I'm not mistaken. But somebody else took over, but they are not related. But that's why I always tell people as an investor, like you don't have to be like a stock picker, right? You just want to be part of the action.
Yep. Yep.
So, it doesn't always have to be sexy and exciting. Sometimes boring and consistent will get you there rather than just not doing nothing, right?
Yep. Yep.
Like, you know, if
Man,
you can if you just buy an index fund and just close your eyes, um,
and chill.
and chill and you just consistently deploy money into it, you're gonna be okay. So,
Man, so a lot of the stuff that he invested in his portfolio for Q1, they're all down. So he invested in Apple, American Express, Coca-Cola, Bank of America, Chevron. They all down about, yeah, they're down a good number on them. The biggest
yeah.
position that's down is Apple. They're down
Mhm.
like about 25% on that one.
It's come back a little bit though.
Yeah, yeah.
Yeah, it's
But
come
that was
back a
from
little bit.
Q1 though, so we'll see
Yeah,
what's.
so Q2 is probably going to look a little bit better
Yep,
because Apple has been on a run since last week.
yep. But
Yeah.
they're sitting on the $325 billion in cash. I ain't complaining about that. You know what I mean? Shoot.
But
You see
to
that?
me, that's too much.
I mean, if you
That's
earning money on top of that,
but just imagine, right? You got $325 billion in cash. Just imagine if you took 1 billion and you put it in
you
Planetary.
deployed it, it would have, yeah, yeah, you would have made that back again
Yeah. Or
multiple
if
times.
you took 2 billion and you put it in Nvidia,
Yeah, yeah,
or you took 1 billion and you put it in Microsoft, especially after such a significant drop in April, like
yeah, yeah.
why are you
But
hoarding all of this cash?
I
And
don't
to
know, man.
me, it's like, okay, I'm not saying you got to hold it for 10 years, right? Hold it. If you held it for the last 3 or 4 months and you sold it, you probably doing pretty good.
But that's
But
the
I don't know
thing,
what
though.
restrictions or mandates they have
Right,
as far as
right.
their position sizes. But I mean, an $88 Nvidia. If I'm Warren Buffett, out of 325 billion, I'm putting 5 billion in. I'm putting 5 billion in.
Whether you like it or not, you're gonna
Like
put.
whether you like it or not, I'm putting 5 billion in there.
It's crazy,
That's why I
man.
keep telling people, whoever wins the lotto, give me a call. I
Yeah.
got you.
Wale, we got you set up for the rest of
I
your
get you
life.
set up for the rest of your life. You will never
Man,
go broke.
I need to play
Trust
the
me.
lottery. Shoot. Get a one-time $500 million. After taxes, probably get 200 some $1 million.
You'll
Oh,
never,
Wale up.
yeah, you'll never have to work in your life.
Oh, Wale
I
up.
will make sure of that.
Man, I might go buy a lottery tonight. Give me a dog. Play some numbers.
So I don't know. I don't know what he did in Q2. I want to see those numbers though, but I don't know. That's just a little bit too conservative. Now, if you only had like maybe 100 billion, I'm not like I said, I'm not saying put $100 billion on Nvidia. Five
Right,
billion
right.
out of 325. Come on, bro.
Yeah. But like you said, like there might be restriction on what they invest in and how they
Yeah,
invest it. So
that's
it's
yeah.
like,
No, I use some restrictions. So
they're definitely a big, slow moving giant investment company. You know what I mean?
yeah.
So yeah.
And when I look at how they invest like insurance companies, right? Like
Hmm.
insurance companies don't take a lot of risk because they have to match assets with liabilities.
Yep.
So a lot of insurance companies they invest a lot in like fixed income. And basically what they like to do is to make sure as long as we got enough assets and cash flow to meet our liabilities, we don't need to take that much risk. That might be the reason why they don't venture off into that
Yep.
stuff. But man, I'd carve out a separate division, call it Berkshire Hathaway Growth Fund call Wale and be like, "Yo, run this fund for me."
Wale will take care of y'all. You hear that?
I'll take care of y'all.
If you win the lottery, please hit Wale up. Because
Because I would have bought Nvidia and I would have bought Oklo.
Yo,
And if
can
you
you
would have paid
imagine?
me $5 billion in that,
Can you
could
put
you
can
imagine
you,
where you'd be sitting right now?
5 billion at on Aklo
At 24 a share in April?
at $5?
Oh, if you would have bought it at $5, that's a different story. But I'm just talking about in April when we
Yeah,
had that drop. Like when that drop happened, if let's just say I was a fund manager, I'm telling you, I'm going shopping.
yeah,
I'm going
yeah,
shopping.
yeah, yeah.
So
Man, well, you
I
heard
don't
it
know.
here first. Like I said, you hit the lotto, hit Wale up. He's gonna
Yeah,
get you. He's gonna get you set up pretty.
get you right.
But yeah, man. Any last minute advice to the people beside the lottery?
The only thing I'll say is I heard a saying this week that I really enjoyed. I'll probably post it on my page someday. But when it comes to trading, proper preparation prevents poor performance.
Yeah, push a P.
Yeah, proper preparation prevents poor performance.
Yeah,
So if you're prepared, especially when things don't go your way, you don't panic. You say, okay, I have a plan. This is what I'm going to do. Give you an example today. So 2 days ago, we saw a big order of RGTI calls at the 18th strike while it was trading at 16. So a little about 12% out the money. Speculative trade. We're just like, hey, somebody put up $2.4 million in this trade. I'm gonna tell the trade. So it was an earnings play. RGTI actually was down after earnings. And most of us, especially me, were down pretty significantly in that position. Initially, my plan was I'm just going to sell at open and just get out. But then I said, you know what? This is a speculative trade. I've got till Friday. I'll just see if the whales start to sell. If they sell, if I see some large sell orders in the morning, I'm just going to get out. So when we were watching the trade today, right, we saw that it was dropping to an area where the shorts were starting to get squeezed. So we spotted a short squeeze. And I alerted the group. I said, RGTI is in a squeeze. Let's see if the shorts cover. And sure enough, some of those calls traded down to about $9 a contract and got up to like 65 a contract. So I averaged down because again, it's a speculative trade, cheap, you know, cheap contracts. It's anytime I'm in a speculative trade, I go in with the mindset that if this goes to zero, it goes to zero. It's gone.
yep, yep.
So average down roughly at about $9 a contract. And man, that
Gone.
thing went to $66. But the only reason why I stayed because I had a plan. So don't be reactionary when you're trading or investing. Have a set plan before
Yep,
you go into every single trade. And
yep.
if you do, you can sit down and make clear decisions about how you want to approach it rather than panicking or, you know, getting scared or something like that. Because
Yep.
being down 78% at open, because I went in with the mindset that if this goes to zero, it goes to zero, I didn't like panic.
Panic. Yep.
I was like, okay, what do I do? Do I get out now? Do I hold? And I just said, you know what? Let me look at the charts. Let me sit down and hold. Didn't see the whale sale. So I thought, all right, let's write this out. It
Yep.
worked
Yep.
out.
Yep.
So I didn't know it was going to work out that good. I was like, I'd be happy making my money back, but I ended up doubling it. Can't be mad. So yeah.
Man.
So I'll leave you.
What's it? Proper
Proper
preparation
preparation prevents poor performance.
for performance. 5 P's.
There you go.
Man. Well, I hope you guys wrote that down because that's definitely a good tip to go into the market with. Like you always gotta be prepared, man. I
Got to
don't
be
care.
prepared. Got to be prepared because
Because
you could wake up and things may not go your way.
yep, yep. And that happens all the time in the trading world and investing world,
Yeah.
So yeah.
So,
But
um, yeah, trading is not about making predictions. It's about what you do when things happen.
when things
So
happen. Yep.
Shane said diamond hands. Yeah, diamond hands.
What we used to call them in 2020, hold them. You gotta hold them, man.
Man, gotta
Yeah.
hold the line.
Oh man, but this was a good episode. Thank you all for tuning in, man. If you find today's episode insightful and helpful, please, please, please don't forget to subscribe, leave us a review, and share this episode with everybody that you can follow it. Until next time, I'm your
Yeah.
co-host Billy. I got Wale with me.
Want to also say thank you. I think we reached 10,000 views finally. So we're at 10,000 views. So thank you for those that tune in on a regular
Yes.
basis.
Please
And
get us there, y'all, because we're gonna monetize this channel. You know, we don't charge out for this channel, but we're gonna charge the heck out of YouTube, yo. So get us there. And let's get those numbers up, man. I think we passed 112 followers right now, subscribers, I mean. So we're getting there, man. When we hit
well,
that
the slow
10,000,
grind, the slow
yeah.
grind.
When we hit that 10,000 followers or subscribers one day, we're gonna we'll do something. We'll do something special.
Yeah. Maybe I'll give out a free month of membership for our trading group or something like
There you
that.
go. Well, maybe
Because
something bigger. We never
man,
know.
we've been smacking the market in the trading
Yep.
group. If you don't believe me, ask Shane. If you don't believe me, ask Shane.
Jay, we gotta get you on the show, man. But
Yeah, we got to get
yeah.
Shane on the show, man. Because yeah, Shane been rocking with us for a long time.
Yeah. But anyways, you guys have a good night. We'll see you guys on Friday. And please, if you guys have any questions, drop it out, whether it's on Instagram or send us a message. Let us know. We'll be able to answer your questions on Financial Friday. So with
Yes,
that being said,
sir.
yeah, have a good night. We'll see you guys on Friday.
See you Friday. Take care, everyone.
Peace.